So let's talk about a few of our favorite stocks today, with one actually being called the greatest growth play in the history of the stock market by Wall Street folks. But you know, we don't care about that. We care about valuations and solid fundamentals. So let's talk about the details of each stock and if one of them is actually the greatest growth stock in the history of the stock market. And we'll discuss valuation as well for these stocks because you guys know that's the most important thing in the end. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today, guys. No hype to the sky, valuations, or anything else like that. We're going to talk about the truth about these stocks, even if it makes some folks a little bit upset. All right, so there's a few of our favorites in this particular video here. There's a few stocks that we don't talk about a lot here on this channel that you're going to get my opinion on as well. But it comes down to how, and I kind of want to give you an impression of how Wall Street's viewing these particular stocks, what they're justifying those thoughts with, and then more importantly, we'll kind of run that out with what actually matters in the end in regards to the stock market there. So make sure you stick around for the whole thing. There's a lot of different stocks discussed here, and I want to make sure we talk about all of them, but more importantly, kind of show you the ins and the outs with Wall Street's game, and a lot of other things like that are also going to kind of be exposed as well. So without further ado, let's jump into the video.
Let's get the bigger picture. Jeffrey Small is with us, President, Arbor Financial. Let's talk about what's going on in your mind. I mean, we just had Nvidia. I think that was an important one. What say you?
Oh, there was no doubt the market's hopes going forward, the secular AI boom and the secular growers of the big mega cap, big tech stocks were severely dependent on the numbers that Nvidia produced yesterday. And they did produce great numbers. They were actually stellar, up 122% in top line number, 170% in profit was up, 75% margins. And so for every $100 Nvidia makes, they make $56 and they get to keep that as profit. That's a ridiculous number compared to the mega cap, big tech stocks. But Nvidia's numbers are slowing down. And so quarter over quarter, it only went up 15% on the top and bottom line numbers. And if it did maintain that 15% growth for the next 12 months, we would see the stock rise approximately $82 from where it is today to around $202. And so I say Nvidia is a buy. These dips right now are a bargain for one of the greatest growth plays in history, Nicole.
Oh, there you go right there. One of the greatest growth plays in history. We'll talk about that here in just a second. Let's discuss their earnings first. You cannot continue to just have continual growth rates, 40%, 50% growth rates for infinity. It just doesn't happen. So slowing is contextual. The larger you get, obviously there's some stocks to where they get like a 7% growth rate. And that's a great growth rate given the size and given the amount of revenue they draw, billions upon billions of dollars, versus a small cap company where maybe they only have, $20 million worth of revenue. So doubling that revenue really doesn't even, other companies make more than that in an hour than, than those companies like that. So it becomes relative. That's where you get yourself in trouble as an investor, is when you start projecting out these 50% growth rates for a decade and all this other crazy stuff like that. It's literally impossible to continue at those particular growth rates, especially once you kind of reach large cap, territory, much less mega cap territory. They're impossible. So anybody expecting that sort of explosive growth to continue at Nvidia, that to me is where you get some of these crazy bull cases and some of these, I get really, really skeptical at that stage. Now, does Nvidia have another $80 or so to go for the rest of the year if they continue to 15% growth rate? I don't think that they do. I don't believe Wall Street's going to be willing to pay that. And more importantly, what the multiple would be for that. But that doesn't mean I don't believe Nvidia is not a great play, that it's not a great stock, and that the dip right now is a great buying opportunity. Again, I don't own Nvidia. I have not done my due diligence. You have to do your own due diligence on that. I'm just looking strictly at the valuation piece and going, I think we're a bit stretched there. If we're only getting 15% growth moving forward and trying to get to that $82 target, I think it's a very, very rich target. It doesn't mean it can't trade there, but that also doesn't mean it will be overvalued, because it will be overvalued at that stage if they continue at that growth rate. Now, obviously with Nvidia, as we have seen, until there's somebody else that pops up and is able to produce something and give you something like Nvidia can, they're picking from the best of the best. They're getting money from the best of the best, who are more than happy to pay, maybe not happy to pay, but they're more than able to pay the billions upon billions of dollars they've been pumping into Nvidia. And within the next year, I don't see that changing in any way, shape, or form. Doesn't mean something else won't come along and obviously take over that slot, or at least provide an alternative. Obviously, we all know chips eventually get commoditized anyways. Sooner or later, all that sort of things will happen. But the question is when, and for right now, they just have a magic sauce that nobody else has to offer. In terms of being the greatest growth play in the history of the stock market, I don't know. That's pretty far-fetched there. If you want to call this past run over the past year and a half or so, or basically since 2022, whenever they basically introduced that new chip and it kind of took off to the moon there as one of the all-time great runs, especially for a large company to begin with, already a large cap. Yeah, I will buy that one. I could definitely say that's an incredible run. Having said that, there have been times where other large cap companies have gone on great runs as well, but they did just happen to catch kind of magic in a bottle and, right time, right place, right product, right everything, right audience or customer base that can afford this that are also booming in regards to their businesses. And so, yes, that right there in regards to that particular piece might very well be, but in terms of being the greatest growth story ever, yeah, I don't know. That's probably a little bit of a stretch there. We can probably pull up the history of the stock market there and find some just ridiculous runs, probably with some companies that are still going to this day in regards to the stock market there. So if you want to put it in the top 10, top five, sure, I could argue that. Beyond that, we're probably getting a little bit of hyperbole there, but that's okay. It's part of what they do there. He's trying to, create excitement around the stock, trying to say something that's newsworthy, notable, quotable, so that way he can, increase his brand and all that sort of stuff. It's also part of the game as well. It's also why you get some ridiculous um, price targets and commentary and stuff like that from a lot of these Wall Street guys. Because if the big dog that makes a prediction, a crazy way out there prediction that happens to come true, all of a sudden now you're a genius, you're, the master of everything. Kind of like Michael Burry, I mean, hey, you make one call where you really somehow, put all the pieces together and figured it out before everybody else did, and made a fortune. But you've been wrong pretty much every time since then. So, I mean, it's kind of one of those deals, but he's still known as a genius, right? Because of the one call, the one time. So everybody's kind of shooting their shot because basically you can have a career on that for the rest of your life.
Yeah, and look, you're talking about Nvidia. You also think Meta's right up there too. This is your 1-2 punch.
It really is. If you want to use this boxing metaphor here, Meta and Nvidia have been the two best stocks here the last 30 months in the market to own. And it's kind of ironic. What do they have in common? They've got incredible fundamentals. Meta just outperformed dramatically. Their quarterly earnings were up 73% year over year. That's a phenomenal number. Their user base expanded another 7% to 3.3 billion. They control 75% of the internet. They're the most of advertising, that is, of internet advertising. They are the most undervalued Mag 7 stock in the market today at 26 times earnings. And, as long as their earnings keep growing, this stock's going to grow. My 12-month price target is $600 in 12 months from here. I think that's very easy for them to accomplish at this stage.
Yeah, I can't argue there with Meta. It is just one of those companies. It just prints money. I don't understand why people doubt it. I don't understand why people, I understand why. A lot of people don't like Zuck. A lot of people don't like some of the things he does and some of the other things of that nature. Understand that completely. But looking at the company itself and how he runs the company, man, it's hard to find something with a larger moat, bigger audience. I mean, 3.3 billion users, active users on their platforms. Think about that for a second and the reach that they have. And oh yeah, by the way, they haven't monetized a huge portion of that audience yet, which is still to come. So when I look at Meta, I actually like it better than Nvidia. One, I don't understand the chip business nearly as much as I understand what Meta does. And two, I believe in terms of steady growth, year in and year out, quarter in and quarter out, in terms of stock price moving forward from here, man, I think Meta is going to be very, very hard to beat. And on top of that, I'm getting a better deal in Meta right now in regards to valuation. So for me, I was happy to buy it at, 200, 150. Obviously, we got it all the way down in the 80s as well. Doesn't matter what you're buying at this stage. Anytime the stock gets a little bit undervalued, I just add to the company, add to the stock. I know there's all kinds of levers he can pull to create new profits. Basically, it feels like out of nowhere, but they're pretty much just guaranteed profits coming in the moment he decides to monetize all the other various apps. It's kind of their business model per se, is to kind of grow these apps out to billions of users, hundreds of millions to billions of users, and then monetize them at that stage to where it's just money coming in basically free at that stage once they've already kind of gone out and kind of executed at that sort of scale. And it's a scale that nobody else can reach. So obviously you guys know I'm a big believer in Meta. Every single time it dips, I believe the last time we bought was 460 or so, may have been 440. I don't remember off the top of my head. I guess I should have looked before I put play on the video there. But obviously we're up on those shares, and it just seems like it's easy money stock at this stage, and has been for a long, long time.
All right. So what's the final here when you think about some of the other names in the Mag 7? I mean, let's keep on this for a moment before we get to some of the other topics. But, I think about the Magnificent Seven, the whole group. Is the whole group pretty interesting to you or not necessarily?
Well, I do love the whole group, Nicole, but I didn't realize we'd be talking about the other four today, but that's okay. I think Microsoft is a phenomenal buy at this price right now. They've got great upside. Of course, they're in the middle of the AI boom, as well as Apple.
All right, yeah, Microsoft. I can't argue that. I don't know what the valuation is. I've not looked lately at all. So you got to make sure you do that particular piece. But in terms of growth rates, yeah, I mean, with OpenAI and some of the other things they're working on there, they have runways in the future for that growth. Of course, you have all the traditional Microsoft products that are not going anywhere anytime soon that continue to drive that business as well. So a lot of different levers there for Microsoft. So definitely don't mind that one there. But let's see what he says about Apple next, because I obviously understand that stock on a much higher level, and obviously have been tracking that stock for 20 something years now.
Apple is really, starting to gain traction. They've got their big announcement coming out on what's going to happen with their phones. We're expecting a super cycle here sometime midpoint next year to occur as AI is integrated into their cell phones. And so I think those are also a great place to have.
So, yep, all right there with Apple. I think a lot of that run that we're going to see if we get an iPhone super cycle or just have AI just in the newest phones, which is going to push a lot of people, it's the longest time in between upgrade cycles on average for Apple users. So, it speaks a lot to the business kind of stagnating, whatever the case is. But a lot of that has already been priced in. Now, how big the super cycle is obviously remains to be seen. How much money they're able to squeeze out of the consumer. Is this new base phone going to start at $1,200, $1,500? I mean, every time we think a price is utterly ridiculous for an Apple product, they do it. And then it sells like hotcakes. I don't understand it. Apple's the only one with that weird pricing power in regards to their products. But I do think a lot of that has already been priced into the stock. We kind of talked about it at the beginning of the year. I thought if it continued to flounder, which it was trading down there at the beginning of the year, that if that continued, when they announced their, kind of jump into the AI race there, it was going to get a massive run. And that's exactly what happened. It trended down, trended down, trended down. They made their AI announcement, and then bam, there it was, up over $200. Obviously tracking right along, getting close to 240 now, approaching that 250 mark, really on nothing fundamental in regards to the earnings and everything else. That's why the valuation is so high right now for Apple, is because we haven't had anything fundamental yet with Apple. And more importantly, even if we get an iPhone super cycle, we won't see that numbers until next year. We won't see those tangible earnings until next year. So obviously Wall Street is front running this one big time ahead of time. So you got to be careful there when you're looking at Apple and how you're analyzing Apple, more importantly, because there's a lot of front running there. Again, everybody wants to be an Apple, whether you're a safe investor, whether you're a growth investor. It just kind of seems like that's just one of the plays that everybody wants a piece of at some point in time. And so that's exactly what we're seeing reflected in the price right now.
Has lots of promise. If they can master their autonomous driving here in November, we'll see where they are, what the stage of that is. And so, Netflix is doing incredibly well too. So all of these companies are secular growers.
So not a lot there on Tesla or Netflix. Tetflix, I guess is what I was gonna say. I don't even know if that's a real word. I don't even know what that would mean. Don't Google it. It probably means something terrible. But nonetheless, you guys know my thoughts on Tesla there. It's cyclical. It's going to slow down, I think, until next year. That's exactly what Elon told us was going to happen anyway, so I'm not concerned with that. Autonomous, I still think, is further off than a lot of the really, really bulls think. Not as far off as the bears think, but we're kind of, further off than I would like to be to where I would count it into earnings right now. I'm not counting anything in regards to that right now in terms of earnings. It's also not in my bull thesis that robotaxi or FSD is this giant mega thing that we all think or hoping could be. For me, those are cherries on top that could very well be huge drivers for a lot of gains later on. That's why I've been so disciplined with my pricing for the past year in regards to buying, and why I'm up on all of my buys over the past year and a half, actually really for the past, 3-4 years now, just because of that particular thought process that I'm not including all those things in. So therefore I don't stretch my valuation out. I keep it very, very conservative, which has allowed me to be able to not only build out a full position, but also add a lot of bonus shares over the past couple of years in regards to Tesla there, which is where that disciplined investing comes in, and being conservative with your estimates comes into play. I don't know a whole lot about Netflix. That's one that I just missed. Obviously I don't know anybody that doesn't have Netflix. So obviously I think they can charge whatever the heck they want. They can continue to just bump it up $1 here, $2 there. Obviously they're doing ads now. There's a lot of different ways and a lot of different levers they can use to pull money from, but I don't know where it's at in regards to valuation. So make sure you're doing your valuation there in regards to Netflix. And of course you saw he didn't have a whole lot on either. So it may have been a while since he looked at it. He didn't mention Google either, which of course is one that I'm continuing to buy because it just seems to get beat down every quarter for whatever reason. So, hey, I'm happy to add Google as well on any sort of dip. Because I like the valuation of Google as well.
For the long term. And even though we have some rotational leadership changes in the market today, due to the decline in rates, these Mag 7 stocks will not be affected to the upside by rates followed by Federal Reserve action when the Fed lowers rates. The broader market will, especially in the small cap arena. And so those companies have more of an upside effect when rates are adjusted to the downside. And so in the meantime, though, I'm a firm believer you've got to have these secular growers in your portfolio for the long term, Nicole.
Okay, so as you can tell, he's bullish on big tech overall. I believe I am too. I believe most of you guys out there are as well. But valuation is what matters in the end. And a lot of these companies for now are a little bit stretched. Nvidia's a little bit stretched. Not crazy. There's no out of this world valuations like we saw in 2021. None of them are stretched to that degree, not even close to that degree. And it wasn't all the Magnificent Seven that was stretched back then either. It was just certain pieces of it. So we're not seeing that at all. And of course, we're also not seeing steal deals like we got in 2022, the following year in the Magnificent Seven as well. So we're not seeing either one of those particular scenarios play out. But when I think about a lot of those stocks that they were talking about, some of them are a little bit stretched, like your Nvidias. I'm sorry, for me right now, Tesla's a little bit stretched. The earnings have not been there to support the valuation where it's at right now. I also know there's some run in regards to Tesla coming into the robo-taxi event and all that sort of stuff like that. And that tends to be they run up into it, and then of course it sells off afterwards. Are we setting up for that again? I have no idea. I'm not here to play Wall Street's games or try to chase that sort of stuff. I'm just going to buy whenever I like the valuation, and that's it. I keep it that simple. I let everybody else worry about all the rest of the noise and all the rest of the, is this a catalyst? Is that a catalyst? Guys, 99% of the stuff they talk about on here and a lot of the stuff we hear about at YouTube are not catalyst. If it does not add to the bottom line over the next quarter or two, maybe a year out, it's not a catalyst for the stock. So you got to kind of keep that in mind when you're thinking about catalysts for each one of the stocks that we talked about today. That's just a key point you got to understand. It has to add to that top line and more importantly, that bottom line in the end, that net income to push that valuation up. If it's not doing that, it's nice. It makes for pretty charts and graphs and makes for great marketing material, but it doesn't actually provide anything to the bottom line. And that's what matters in the end in regards to where you're going to go over the long run in regards to that stock and that stock price, more importantly. And if you need help with understanding fundamentals like that, you can take 5 courses for free. You can get free coaching. You can jump on live Q&As with me, be a part of the best 6, 7, and 8-figure Discord out there, having a whole team help you understand all the concepts we talked about today and every concept you need in order to be a successful investor in the stock market, to include valuations, price targets, creating a plan, understanding market dynamics, everything else involved. Make sure you check out the pinned comment for my group. Those of you guys that have lasted this long, I may have left something special there for you guys down there at the pinned comment. So make sure you check it out and see if a membership's right for you and see everything you get. There's so much, way more than any other group out there for the price. So check it out. It's the pinned comment. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.